Hi, everyone. Today, let's talk about Janet Yellen saying that new uninsured deposits may still be at risk. Next, First Republic, despite their $30 billion infusion, is still struggling. And somewhat unrelated here, we have an arrest warrant for Putin for alleged war crimes. Then we'll get into the charts. Then we'll go over my results and my thoughts going into the next week. This is going to be another quick one, but if you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays. So make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Janet Yellen came out and said that if there are bank failures in the future, individuals are going to have to rely on their FDIC coverage, despite the fact that the federal government came out and helped the depositors at Silicon Valley Bank, as well as Signature Bank. I do find it a little interesting. Normally the coverage is $250,000 per bank per account. But the Fed did come in here and help out a lot of depositors, but they're saying they're not going to continue to do this in the future, which is interesting. If they continue to print money and help out depositors, I wonder why they're deciding now that they might not be able to help future bank bankruptcies, but it is something to pay attention to. Moving over to First Republic, their stock continues to get beat up. It's not at all-time lows, but it's still doing pretty poorly at down 33%. We talked about yesterday how they got $30 billion. And apparently, people are still concerned that they could go bankrupt. Obviously, this continues to affect the rest of the regional banking market, with Western Alliance dropping 15%, US Bank Corp dropping more than 9%, and PAC USA down 19%. And lastly, here for news, Putin officially got charged with war crimes. Obviously, this does not mean much while he's still the leader of Russia. We're not just going to remove him as dictator of Russia, but it is interesting to see that the world is still continuing to say that Russia is the bad guy here. Of course, we have Xi Jinping meeting with Putin in Russia next week, and there are still some countries playing ball with Russia. But for the most part, we are united against Russia in this fight in Ukraine. Moving over to the charts, I actually want to start off with the Federal Reserve total asset balance sheet here. And you can see it's been declining. They've been selling assets at a pretty substantial rate. They pretty much peaked out here in April, March and April, at almost $9 trillion. And we got all the way down to about $8.3 trillion. And you can see here, over the last 2 weeks, they had a pretty big step up of almost $300 billion. So we see a little bit of quantitative easing coming from the Fed, despite the fact that they're probably going to raise rates once again here next week. But their balance sheet does speak for itself in the fact that it is going up quite fast, especially compared to how slowly it's been tapering off. Moving over to the S&P 500 here on the 4-hour and the daily chart, you can see the 4-hour continues to find support at that 21 EMA. We also did retest the trend line. You could argue that we closed below it and then closed back above it here, and you can see a little bit of a rally after hours, which is interesting. But otherwise, looking at the daily chart, this is fairly weak. We didn't get a step down in the bearish direction on momentum, but we are retesting the SMA here on RSI. In terms of volume, you can see there's quite a lot of volume done in this lower area, meaning that we could see this base of support continue. Looking at those same price targets that we talked about yesterday, up around $399.50, up at the trend line, that seems to be an area where we're going to find resistance. It also correlates with this area of highest volume, 398.16, right in this zone. But otherwise, this was a mixed day. Doesn't give us a lot of information, but does seem to be a higher low potentially, and a bigger move up into Monday does seem possible. Moving over to the NASDAQ on the 4-hour and the daily, you can see we had a pretty big rejection here. We wicked these previous highs going back to February 15th, got really strong rejection. We're now in this previous consolidation zone, looking to see what happens. We're just above this area of higher volume at about 305. Does seem to be holding 304.50, somewhere in that zone. If we do continue this little bit of a downtrend that we had, we should be looking for support down at 341 cents. That's the area we were looking at. Otherwise, we have daily VWAP sitting down at 296.90, so a pretty good amount of downside. 4-hour VWAP sitting at 301.91. I would like to see a little bit deeper pullback if we're going to get it, and then see a push through that 1025 level. But otherwise, everything here is still fairly bullish, except for momentum here on the 4-hour chart. You can see we were in overbought conditions on the RSI just for a moment there before we had the sell-off here today. And if this is going to continue, we do have to get above that 310.25 level. Moving over to the Russell and the Dow, you can see the Russell testing those lows once again. You don't want to see that. If we get below these lows, obviously that's going to be very bad. We're looking back down to these previous lows at 164. I would like to bounce off of this level, get back above the trend line, and then look to retest this major trend line with the 200 SMA up here at 181.26. If we do get that pullback up here to 180.50, that would be great. And then we'll see what happens from there. But right now we're just watching whether this 170 level is going to break or not. Looking at the Dow, similar thesis. Consolidating in this zone, looking to see if 315 holds or not. If it does break down, then we're looking at 310 and then back down to 303 as your potential levels. Don't forget we do have this gap down here at 310.75. Certainly a possibility that we see a breakdown and a fill of that gap. Momentum on both charts is bearish. We did oversold conditions on RSI here. On the Russell, we didn't quite get that far on the Dow. We have a higher RSI read despite having lower price action here on the Russell, meaning that we do have a little bit of bullish divergence potentially going into next week. Moving over to Alphabet and Amazon here, you can see Alphabet's had a pretty strong run over the last 3 days, but we're now at the 200 SMA on the daily chart, the area where we found rejection before. I would guess that we're going to get rejection there once again, at least coming back down to $98, so about a 4% move down from where we are right now. Certainly could go a little higher, just like we did here previously. Get that overbought conditions on the daily chart before we get that pullback. It seems we're going to get a pullback at some point here on Google. And looking at the volume here, you can see that does correlate pretty well with that first note of higher volume, right at about $99. And then below that, you're looking at about $94.75 back in this previous consolidation area. Looking at Amazon, we do seem to have a little bit of a breakout. Might get a little bit stronger pullback, retest these EMAs down at $95, $96, and then I would expect to see a pushback up to the 144 EMA, currently sitting at 103.20, so maybe a day or two of downward price action, create a nice higher low here, and then get the bigger push up into that 102 zone. Moving over to oil and gas and financials. You can see oil and gas did fall off a cliff, but we're retesting the lows here going back to September of 22 and then this kind of lower consolidation here in June and July from 22. If we can hold there, we could certainly see a bounce, but right now this does look quite bearish. You have all the EMAs and SMAs pretty much in line here, and it does look like we're going to see a further push lower, potentially down to the trend line at $86, $87. That would be interesting. Should find some support around 109.50 back at this previous low and previous consolidation area if we do break down. Otherwise, if we do get a retrace, probably not going to get above 130 in my opinion. Realistically, 126 and back up to the daily 9 EMA makes sense. Looking at financials, similar thesis here. You can see we're back at the October lows for financials. So despite this meltdown that we've had in terms of all these banks going bankrupt, we're actually not any lower than we were here in October or June of last year. If those levels do break, though, let's jump out to the 1 week view. Then we're going to see some lower prices, right? So we're retesting the high from pre-COVID. Definitely could see $29 back at this previous consolidation. Maybe the highs going back to August of 19 down at 28.70 or so, which would be about another 10% down move from where we are right now. Keep an eye on this. Tons of volume here on the week. Obviously, momentum and RSI are very bearish here on financials, as well as oil and gas. Finishing up with the charts here with the VIX on the 12-hour and the daily, you can see another day of consolidation. We've been up, down over the last couple days. Lots of volatility here, even on the VIX. Right now, it does seem like we're kind of at resistance and we might get a little bit of a pullback back down to 22.50. Certainly makes sense. I was looking for a bigger pullback down to 21, maybe 20.50 back here after the move down that we had in multiple tops, but we seem to be consolidating here. We're not making new highs. We're not breaking resistance, not breaking down quite yet. Be a lower high here, candle of indecision on the last 12-hour candle here. Otherwise, momentum on the daily, slightly bullish, RSI slightly bullish, 12-hour RSI slightly bearish. So still mixed signals here on the VIX. Moving over to my results, unfortunately, I wasn't able to actively trade here today. There was tons of volatility and tons of opportunity with how much movement there was, especially here in the IWM. Big move, something to watch in there. But basically, I have the same positions that I had yesterday. You can see still a covered call here in the IWM. It says it's down a little bit, but I still have some money to be had here in this covered call position, about another $112, which is fine. I'll continue to hold this position. I'll probably get assigned on it on Monday. I do think we'll get a little bit of a bounce. We'll see if we hold. If not, I can certainly roll out these calls. As long as IWM continues to stay above that 170 level, I'll hold this position. If it does break down from there, though, I'm going to be out, that's for sure. Looking at the Qs here, same thesis, still this covered call here. I did get out of my puts a little bit early. Probably should have held them a little longer. Either way, not too bad. Like I said in my last video, the market has to go down quite a bit to lose money on this position. Has to close below 301 here on the Qs, which I definitely don't think is going to happen on Tuesday. I still think we have some bullishness in tech, as that seems to be the safe haven away from all these financial issues. Overall, still neutral on the markets going into Monday and Tuesday. And don't forget, we do have the Fed potentially raising rates 25 basis points on the 22nd. Sorry about the late video, but let me know down in the comments if you have any questions or charts that you would like me to go over. I wasn't able to go over everything, but I did think the Fed balance sheet was interesting and definitely something to mention, so keep an eye on that going forward. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Getting really close to 1K subscribers, so if you'd like to subscribe, I'd really appreciate it. Otherwise, of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.